Hello and welcome to Sisters for Financial Independence. In today's video, we are diving into the 3-fund portfolio. If you are a new investor or just want to simplify your investing, this video is going to be for you. And if you are a new investor looking for more investing lessons, check out this playlist where we cover Investing 101, and that can help guide you so that you can finally invest your money for yourself and your family's financial future. In this video, we are going to be talking about the 3-fund portfolio. A very simple, low cost, but effective way to invest your money in the stock market. It is very simple and very easy to replicate for your portfolio. Plus, I will also show you examples of all the funds that you can invest in through Fidelity, Charles Schwab, as well as Vanguard. This video is for educational purposes only, and while the stock market has been doing really well for the past few years, it is always not an indication of future performance. So just keep that in mind when you are investing. So what exactly is a 3-fund portfolio? Well, it is exactly what it sounds like. It is a portfolio made up of 3 funds. The 3 funds are: number 1, a fund for the U.S. total stock market, which has exposure to the entire U.S. stock market. The second fund is called the International Stock Market Fund, which covers global markets outside of the U.S. And the third is a total bond market fund to provide stability and income within your portfolio. This approach gives you a broad diversification while keeping things simple and very low cost. Now, when you do invest in these funds within your portfolio, you will have to customize the percentages of these funds. So you need to figure out your risk tolerance, your investment horizon, and when you actually need this money. And then you can adjust how much of your portfolio goes into each fund. For example, if you are young and an aggressive investor with a high tolerance for risk and you have a longer time horizon, you might want to put more of your portfolio into stocks. So you might do an 80% into stocks and 20% into bonds. If you are conservative and you have a shorter time horizon for when you need this money, or you are about to retire, you might want to go conservative and lessen your holdings in stocks. So this might be a 50-60% in stocks and then 40-50 in bonds. So it really depends on you. Now, if you have ever invested in a target date fund, the target date fund actually consists of these 3 funds. So really depending on what your goals are, you might want to consider that route for the target date fund. You just want to expand the target date fund to see what it's made out of, what the percentage of stocks versus bonds are, so it's in line with your goals. So why should you use the 3-fund portfolio? Well, the beauty of the 3-fund portfolio is it's set it and forget it. You avoid the hassle of picking stocks, and you give yourself instant diversification because it does invest across the market. Now, the fees for these funds are also fairly low, so more of your money is actually working for you instead of going to these companies managing these funds. So let's go through how you are going to build these funds within Fidelity, Charles Schwab, as well as Vanguard. Let's start with Fidelity. There are so many options to build your 3-fund portfolio within Fidelity, but this is going to be your basic setup. First one is your Fidelity Total Market Index Fund, and you will see the ticker symbol there of FSKAX. You will then look for the Fidelity Total International Index Fund, ticker symbol FTIHX. And you will also look for the Fidelity US Bond. With all of these 3, you'll cover US stocks, international stocks, and the bond market. Now let's head over to Charles Schwab. If you're investing within the Schwab platform or their ecosystem, here's what you would want to use. Schwab Total Stock Market Index Fund, that is ticker SWTSX. the Schwab International Index Fund, ticker SWISX, and the Schwab US Aggregate Bond Index Fund, ticker SWAGX. These Schwab funds are again also super affordable, making them a great option for the 3-fund strategy. And finally, let's look at Vanguard. Vanguard is actually one of the pioneers of low-cost index investing. And with Vanguard, you are going to use the following funds: Vanguard Total Stock Market Index Fund, VTSAX, the Vanguard Total International Stock Index Fund, VTIAX, and of course, the Vanguard Total Bond Market Index Fund, VBTLX. Again, these have very low cost and provide you broad diversification. You just have to choose the platform and company you want to invest in, and you can do so. If you are going to be investing these outside of Fidelity, Charles Schwab, or Vanguard, note that you might have other fees. So just look at whatever your platform is that you're using to see what other fees will be charged to invest in these funds. So there you have it. That is the 3-fund portfolio. Very easy, very cost effective to set up, and it gives you a broad, diversified investment portfolio that can allow you and your money to grow for you and your future. Many people will look at the 3-fund portfolio and say, well, this is too simple. It can't be this easy to invest in the stock market to build up a portfolio. But I can assure you that it is. Do not overcomplicate investing. Invest in these 3 funds as your foundation. As you earn more, as you invest more, and as you become a more sophisticated investor, you can branch out to adding more funds in your portfolio. But the 3-fund portfolio is a well-known fund. You will see Reddit threads on it. You will see books about it. You will see so much content on it. Sometimes easy is the best, and this is effective. And if you just start with this foundation, that will go a long way to building your nest egg and your financial independence. Before I let you go from this video, I do want to walk you through where you're going to set this up across your different investment accounts. Remember that you do need to open an investment account before you can build a portfolio. And I also want to emphasize that you must buy these funds in order to be invested. Opening an account doesn't translate to investing. You must make sure you hit the buy button for these accounts. Now, you do have multiple options when you are going to set up this portfolio. One could be in your employer-sponsored account. So you will have to check what's available for you within your employer-sponsored account as far as these funds are concerned. Your second option is to create this portfolio within your individual retirement account or your IRA, and most likely you will have access to all of these funds. And the last place is your taxable brokerage. Again, set up the same portfolio. If you want to simplify your life, you can invest in the same way across all of your different accounts, or you can modify it depending on what your goals are for each account. For example, a taxable brokerage might be a play account, might be an account that you can access and be wanting to access earlier before retirement. So you might want to be aggressive in that, or you might want to be conservative depending on when you need that money. Note that your employer-sponsored retirement accounts, as well as your individual retirement account, do have some tax advantages. So you also want to contribute to that and take advantage of those. But also note that these 2 accounts have maximum contribution limits. So you are limited to what you are contributing. But try this portfolio out. If this is your first run around with investing, this can be a great foundation for you to start. If you have found this video helpful, I'd love a like, and I'd love for you to share it with a friend who is new on their investing journey. And if you want to learn more about investing and want to see what other options there are, I want you to check out this Investing 101 playlist so you understand some of the lingo and get comfortable with investing for yourself and your future. Thank you so much for watching, and I will see you in the next video. Bye.